Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets.
Ice raw sugar in New York. I have in recent weeks been away attending technical analysis conferences, so I've come back to looking at sugar with fresh new eyes. What I have seen is that the key feature here continues to be the late April to late August descending wedge pattern, currently 22.24 to right off the bottom of my daily chart. It's highlighted in dark blue on my daily chart. This moved from an original sideways triangle into a descending wedge pattern, and back in late August the market broke out over the upper trend line. However, the move up soon got caught within congestion from early May, late April, and from the March 2012 high at 26.20. This halted the rise, but prices have not turned back down again. Indeed, the recent late September Golden Cross has seen the short-medium moving average, currently 25.56, act as a support as recently as 2 weeks ago. Prices now appear to be caught between the March 2012 high at 26.20 and the high of last April at 27.42. Below the short medium moving average, you have the slowly rising medium moving average, currently at 25.05, and the core of the recent support for the break higher, consisting of the 38.2% absolute Fibonacci line at 24.88, the July 2012 high at 24 even, and the nearby recent 50% Fibonacci line at 23.88. So where does that leave us now? Well, the confirmed break above and out of the descending wedge pattern gave us a primary target X in the 27.25 area and a secondary target X1 in the 28.75 area. The primary target X was reached in mid-September, but so far the market has shown limited interest in trying up to the secondary target X1 at 28.75. To be honest, there doesn't seem to be much topside resistance bar the October 2011 base congestion at 28.36. However, one should not underestimate the lack of desire the market seems to have in trying upwards. This despite the recent Golden Cross. To give you an idea on this, I drew a late August to early October bullish Andrews pitchfork, which fitted, but which I promptly retired for two reasons. The first was how I was not happy about the amount of activity within the pitchfork, and secondly, the action since late August to date may be trying to form a possible wide-ranging double top. As it is, it's still too early on that latter idea as well. Ice Europe, white sugar in London. The break higher over the upper trend line, currently at 691.40, back in late August of the late May to late August expanding wedge pattern, set the stage for the next move higher. This was a multi-pattern move, as the upper trend line was also the neckline for the late May to late August reverse head and shoulders pattern. Thus, a primary target X for the expanding wedge pattern was at 769, with a secondary hard to reach target X1 up at 797.30. Meanwhile, the primary target X2 for the reverse head and shoulders pattern, the one I'd previously referred to as being an out of place pattern, was in the 754.20 area, with a secondary hard to reach target X3 up at 784.90. As you can see from the daily chart, the primary target X for the descending wedge pattern and the primary target X2 for the reverse head and shoulders pattern at 754.20 have both been reached, leaving the secondary targets still available. However, there's a question mark over these secondary targets, as after reaching target X2, the market changed and dropped away. Now, the decline has been halted by a combination of the rising short-medium moving average, currently 712.5, the flatlining medium moving average, currently 695.90, the original broken trend line, and the congestion between about 675 to 700 dating from July to August and again from June this year. This has seemingly been enough to turn prices back up, but the market is now trying to surmount the April high at 730.5 and the October 2011 high at 735. These may be easy enough, but there is still a changing gap above between 738.10 to 748 to fill in. This gap actually has been partially filled in, but there's still more work to be done. Sugar white premium spread. We are in the last quarter of 2023 and this chart continues to be one of the busiest and most colourful of all my charts. Many things are going on, all at the same time. Okay, so I've previously spoken about two big picture items here seen on this weekly chart. We have the recurring big old bullish Andrews pitchfork from 2019 to 2021, highlighted in dark blue on my weekly chart, with the market at the moment in between the lower time below, currently 115, and the middle time above, currently 189. I have said this so many times before, and I will repeat it again. This pitchfork, despite being breached in the past, still continues to show the overall major bullish angle of attack of this market. Next we have an ascending expanding wedge pattern, highlighted in bright red trend lines and above the current market. This was formed between mid-April to late November last year, currently 209.5 to right off the top of my weekly chart. To me, it was and still is not the best looking of such wedge patterns, but it is also still out there, despite being tested as recently as mid-April this year. And it comes with all the possibilities such a pattern invokes. The most recent activity had been the market's moves around and through, on occasion, all the moving averages, notably the long moving average, currently at 129.75, and the medium moving average, currently 140.25, with the change gapping move lower of a few weeks ago. We have seen this activity push down through two 50% Fibonacci lines at 128.75 and 131.5, and the June 2020 high at 134 even, and then back up through some of them as well, though we are currently just below them all. Many weeks ago I drew both a bullish Andrews and a bullish shift pitchfork for the August 2021 to February 23 action, and I've once again not highlighted either of them, as they neither add nor subtract from the current picture, though I have retired the bullish Andrews pitchfork as it is no longer valid. Now, the next point is a big picture item, and it's to look at the whole of 2022 action to date as a possible huge lopsided diamond top, from which we have emerged out from a few weeks ago. We have had a false break higher from this pattern, then a false break lower, and so far the market has not decided as to which way this pattern will drive prices. Now, I am beginning to have doubts about the whole idea right now. You can see this pattern highlighted in dark green on my daily chart. The final point I'd like to highlight is a monthly one, and one that has repeated itself, though only the once. We have had a monthly key reversal down this past September, though not as wide ranging as the monthly key reversal down we saw in September 2022. It is worth bearing in mind as we go forward that this may be something to pay close attention to and see if we have if not necessarily history repeating itself, at least rhyming.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.